All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Thursday, March 23rd, 2023. Thank you so much for taking the time out of your day to join me this morning and every morning at 9 a.m. Eastern Standard Time here on our YouTube channel. And if you haven't already, make sure to subscribe to this channel. I'm trying to get to 10,000. I've been kind of stuck around like 8,700 followers for a while, subscribers. My stepson asked me, hey, when are you going to get your plaque? I'm like, yeah, man, you need 100,000 subscribers. So maybe down the line we'll get that. We'll see. But if you like these videos, please subscribe, share the profile so we can get more subscribers. Really would appreciate it. Love doing this for you guys every day. I did an Instagram live yesterday with Nick, one of our VPs at GAR Capital. Feel free to check that out. I answered some questions from you guys. Always fun to talk to the followers and our members every single day. It's good. It's fun to talk about this stuff. I love it. So good morning, all. Hey, thank you. The Zoom Balloon says the Instagram live was awesome. Appreciate that. Let's go ahead and go around the horn and get started on the day. Dow futures up 10 points, not much. Nasdaq up 102. Apple is up this morning again, flirting with that 160 level again, even after that dip yesterday. Pretty resilient, Apple. S&P 500 up 0.33%, 39.83. We did hit 4,000 overnight. The Bank of Switzerland increased their central bank rate 50 basis points, and the Bank of England did theirs too for 25 basis points. So I think like what I talked about yesterday in regards to this banking situation with Signature, SVB, First Republic Bank, I think that's what it is, or something like that. I always say First National, but it's really First Republic. I think what the Fed and the Treasury is trying to do is to say that, hey, this was just a blip. It's still business as usual. You know, we're still going to fight inflation. And I think that was probably the most prudent thing they could have done. And I wanted to reiterate that today. At the end of the day, guys, the Federal Reserve and the Treasury, they're bureaucrats, meaning you don't vote for them. They don't have a platform that they run on. They're government officials chosen by other government officials that you voted for, whether it's the Congress, because remember, the Federal Reserve still has government oversight, guys. A lot of people think that, you know, oh, they just do whatever they want. It doesn't work that way. The president chooses the Fed chairman. The Senate confirms them. So there is some sense of, you know, voting democracy in there in our government. But again, we vote for the senators. We vote for the president, not for the Federal Reserve, not for the Treasury. The Treasury director or the head of Treasury is part of the president's cabinet. So depending on who you vote for is kind of what you get in terms of views of banking and views of regulations and views of monetary policy. So again, that's up to every voter, how they want to see how the central bank will be functioning or the treasury will be functioning, but that's a whole different discussion. But again, just wanted to kind of give you that they're not a private entity either. They do have government oversight. You know, I'm not here to give you guys a ton of conspiracy theories either, that they're owned by the Rothschilds or something like that. I don't know if there's any proof of that, so I'm not going to even go there. But again, the Federal Reserve is a government entity, yes. They print money, yes, we know that. They do interest rates, yes. But again, they are beholden to political pressures just like everyone else in government. So right now, it just seems that, again, the assumption is that they wanted to keep things even keel. Let's not create a panic. If we start cutting or we pause or deviating, remember, the market doesn't like deviation. Understand that. The market does not like anything changing. They like something that they can predict. The sun rising, the sun setting, that sort of thing. You don't want a sure thing. We like when Apple's up. They're supposed to go up. We don't like it when GME is up 40%, the market, because that creates an imbalance. So yesterday I went ahead and talked about a little more about trading in terms of looking at reversals in a choppy market. And again, when we had this move yesterday from around, say, 40.75 at the top, remember our resistance was around 40.60 on ES. We got as low as 39.70, let's just call it. Keep in mind, guys, that's a level that we were just on Tuesday open. So all we did was retrace that. We have to hold that level, 39.70, 39.68. So again, I am looking for at least a test of 4,000. Where we do there is, well, we'll see. So again, if we get above 4,000, let's place an alert there. If we get above 4,000, keep an eye on the S&P 500 market. Why? Because then you have the 50-day moving average right there at 40.30. But you have to hold 39.70 or 39.75. That's your 20-day moving average. Again, that's our momentum indicator. So far, so good. but let's see how the day goes. No need to add into any risk right now unless we get a move. In terms of downside, what are we looking for? If we are breaking down a little lower and we want to short, fine by me. Here's the level we're looking for. 39.46 is your 39.45 is your 200 moving average. If you were to short here, it'd be very quickly. You may not even get a chance to get it. So again, let's wait for that 200 day to break. And then you have this trend line here. If 39.30 breaks, then you got 3900, which is not a bad trade right there, about 45 handles if you're trading futures. But again, we're going to wait for that 200 day to breach before we buy puts here, if we do. But again, we're looking to see if we get above 4,000. And if we do, then we'll take a look at a couple of levels. The dollar's hitting some support here around 102, again, falling. Treasury yields still chopping around here on the 10-year basis. We're at the 200 day. The volatility index, the VIX, is now below the 100-day moving average, below the 20-day moving average. And again, momentum indicators work. So again, we may have a little more downside today. Maybe we retrace those losses from yesterday and get back to around 40.40. We will see as we go. But Apple today is right near fighting that 160 level that we talked about. That was our strike, and we took the profits on it. Well done. It hit as high as like 147% when it went to when Fed Chair Powell was talking. But keep in mind, it was Yellen's comments that really created the sell-off in the market regarding the unlimited deposit coverage being not on the table. But with Fed Chair Powell, again, kind of the breakdown, I got that from Twitter. Feel free to take a look at that. I posted that on Instagram, kind of the highlights of the FOMC so you guys can understand exactly what was said, what has changed, and what the expectation now moving forward is. I guess right now the market is pricing in cuts starting in June. Imagine that. So maybe we're just delaying the inevitable. The more ammo, more hikes they get, guys, it's just more ammo that they're going to have to cut in the future. They raise so they can cut in the future, and they cut so they can raise in the future. This is the way it is. Let's take a look at crude oil, down 0.63%, even with a lower dollar. Flat dollar. So again, we're watching that as well. Haven't really done much in terms of oil. Gold may be going to 2,000, by the way, if not a little higher. There is a cup and handle formation on gold on a very expanded timeline. Let's take a look at the weekly. And again, it's a very similar structure to what the NASDAQ futures are. You could see the cup. You could see the handle. We're just going to go higher. I think we're going to get to 2,100. I wouldn't trade futures on it only because the margin is so damn expensive. GLD runs so slow. But again, maybe if you get to around 1930, I think that's probably a buy the dip opportunity on gold. If you buy it here, you're really only playing for $25 for upside on gold per ounce. So not a lot of edge there. Silver up 1.20%. Copper continuing to go higher. How important is copper? We know that's kind of a leading indicator for construction and expansion. If that continues to go higher, we're above that support, great. Then we expect to get to around $4.29. We talked about that on the top 10 stocks of 2023 in our YouTube channel. We talked about FCX being a stock that is the highest beneficiary of higher copper prices. It bounced very beautifully off the 200 day. Let's see if we get some continuation on that name moving forward. I would not trade options on it because they don't move as much. Euro dollar, again, we talked about this correlation. How important is the euro dollar to the S&P 500? Let's go ahead and compare it. Let's go to add study. We're going to compare it with the S&P. Let's see, SPX. Well, actually, you know what? We'll do a custom symbol. We're going to do ESF. We'll do ES because euro dollar trades around the same time. And you can see that you have some deviations, but pretty close correlation. Right now, you could see that the euro dollar is kind of breaking out away from the S&P. That's where I expect us to go higher. How about this? The S&P, nice little cup and handle, right? I mean, inverse head and shoulders, excuse me. Inverse, one shoulder, two shoulders. Here's your head. We should get a little higher and meet up like we have been with the euro dollar. So again, as long as the euro dollar goes higher, I expect the S&P to go higher. Why? Because if the euro dollar is stronger, that means the comparative, meaning the ratio, 1-to-1 euro versus dollar, the dollar being weaker, we know that benefits stocks. What's the biggest holding in the S&P? Tech companies. Who benefits the most from lower rates and lower dollar? Tech companies, because they do business overseas and they borrow money. So keep this correlation, very, very important correlation in your back pocket. We'll go ahead and leave it like that. Next we got is the dollar yen. Again, that's kind of a tell of yields. Yields are down, dollar yen is down. Correlation is there. Let's go ahead and do that correlation as well, and we'll compare them. We'll go to studies, we'll go to add study, we'll go to compare with, we'll do the custom symbol, and of course it is dollar yen. Now take a look at this. In order to be a great trader, guys, you got to know what your correlations are. Very, very important. How tight has this dollar yen correlation been with yields? Starting to fall a little more, dollar yen. How much more do we got? Last time we held up and then we got a little closer, but again, we may have some more downside pressure on bond yields, meaning bonds are going to get bid a little more. Again, we talked about TLT and government bonds on our top 10 stocks of 2023. Please take a look at that video if you're interested. All right, let's go ahead and round up here. Bitcoin 27,570. Even with all that noise yesterday, still around that 28,000 level. You need to get to 30,000 before anything gets really interesting. We talked about round number theory yesterday. Ethereum 1756, up 1.83%. This morning on those contracts, very, very nice. Let's answer some questions this morning. We got Zoom Balloon saying SPY levels. Why not? We're looking to play long side or short side for a quick reversal. Really depends. And why do I say it depends? 394.38, we are now around this level. We held the 200-day moving average. We want to get above the 20-day. Remember, we want that momentum indicator. That would get us to what? 4,000 S&P. If we're right around 395, take 5 points away on the future side. So again, guys, we want to get above that 20-day moving average on SPY. Right now, you're below the 200-day, but it bounced up. So again, we want to see if it can hold 390. If it can hold above 390, fine, we just stay put. But if it breaks below, then we can short. But again, 390 being the key level on SPY. Futures would probably be a better trade instead. You have a little more control. But if you are trading SPY, I would say 390 is a level that you're watching very, very closely if that breaks. But as of right now, all you do have here is a bear flag still. So again, we almost broke out of this bear flag on SPY. Take a look at that. Almost broke out of it at 402.05. Let's see if we knock on that door again. And eventually, if you keep knocking, you're going to break, just like here. 1, 2, 3, and then 4, broke, bounced. 1, 2, 3, 4, 5, broke once, and then we fell. So we just got to go ahead and see what the market has for us. Let's take a look now at Tesla, potential cup and handle. That's true. Even the NASDAQ futures has a potential cup and handle. You see it? Exactly the setup. I think if we break above 225, you have that gap fill right there at 262. That's your target on Tesla. And yes, it is a gap. It is a cup and handle, just like the NASDAQ. Let's see here at NASDAQ futures. Excuse me. Apple. Let's take a look at it. Apple, again, still need to break above 160.42. We broke above that. If we break above 160.42, keep an eye on the 165 level. That meets that trend line, the downward trend line that we've had on an annual basis. Not to the T because we got a couple of wicks above, but again, pretty close. We deviated a little bit back to August. All we expect is to get back to this trend line around 165. And then again, you could probably short there if we're expecting a rejection. Or if we get a breakout, then you go to 170.32. But for Apple, I'm keeping an eye on it. But again, we need to get above 160.40. 160.40, I take a look at the 165 calls for next week. NVIDIA, I was watching the semiconductors and they have absolutely been on fire. And what happened here on NVIDIA, like we talked about last week, a gap to fill. We filled that gap, great. Now we'll see if we deviate a little more as we're starting to get near some critical resistance here around 289.46 on the daily. You almost had 52-week highs. So again, you could see that 277.70 is that next resistance, or let's call it 280 zone. If we can get back to 260, maybe we'll get a shot at it. But again, you're really getting to a point if it's a little stretched, just a little stretched. Maybe you start rolling over a little bit and that sets up an inverse head and shoulders for continuation. But as of right now, you're starting to hit that resistance level. Again, I love NVIDIA, but again, look how much it has soared from 112 back in October to 264. It needs to cool off a little bit. And I love NVIDIA. So again, if you have a lot of money in NVIDIA, maybe you got some profits on it. Start taking a look at taking a little for yourself if you needed to. And if you're for retirement, who cares? You're not doing anything. But if you've been trading NVIDIA, the stock itself, and you want to take a little bit of profit here, I mean, you're right near resistance here at 264, now at 271. Let's see if we get to 277. If that does break, you're probably looking at 300 next with continuation. A lot more to go, I guess, if you have the momentum. I don't think it'll get there, to be honest, because it gets a little stretched so quickly. It's all about the velocity of the move. Look at AMD. AMD we talked about with the team yesterday, but again, it was so extended, so we went ahead and did Palantir instead of AMD. I even told the team, pick your horse at this point. That's really all you can do. And in terms of the resistance on AMD, $100.60. That seems to be it. And then you could probably get to the 105 level. AMD looks like a better chart to trade, in my opinion, than NVIDIA. I think NVIDIA just a little stretched in terms of technicals, but at least with AMD, you got a little more room to go. So again, if you break 160, maybe you can take a look at 105 for next week. Any thoughts on Snow? Snowflake, let's take a look at it. Looking at the daily chart, again, I always say below the 200-day, nothing great about it. If anything, you're probably taking a look that if you wanted to own some more, you're looking to possibly get to the 120 level. But in regards to Snow, price action-wise, there's really not much to do here unless you're trying to accumulate more shares. Then again, you want to get to around the 120 level. Not much to trade. If you're going to the 1 hour chart, again, pretty much just chop. Not a lot of volume on this name unless you're playing earnings for the most part. For cloud, again, stick with Amazon, stick with Microsoft in that sense if you want to trade the cloud names. All right, guys, we'll go and leave it there. Thank you so much for taking the time again to join me this morning. We'll go ahead and check you guys out tomorrow. BOC on the weekly. I think he means BAC or BOC. Let's take a look at it before we call it a day. See, BOC. I'm gonna go try BOC. I hope that's what he means is Boston Omaha Corporation. I don't know about them, but I think he means BAC. In regards to BAC, here is my support level of 27.51. Take a look at the weekly chart. And again, look at that. You also have a gap to fill, guys, here at 24.92. So a little more, maybe some more bank headlines would cause us this gap to fill. But again, you need to get below 27.51. You're back above 28 right now. So you really can't do much here until you break that level, and then you can go for the gap fill. You're probably thinking to yourself, why can't I just get under it here with a little bit of a pop? Bank of America doesn't move that much. That's the problem. It's still a relatively lower price stock. So again, you're talking about at most it'll move as $1 in a day. Again, and then that's pretty hard to trade too. Now again, I've traded Palantir 8.5 contracts, and again, that's pennies. But Bank of America, let's confirm the move down before we do anything. We'll go and leave it there, guys. Have a great rest of your Thursday. Let's make it a great trading Thursday, and I will see you guys tomorrow for the next morning note. Have a great rest of your day. Cheers.